Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. On the show today, AMD earnings, Boeing earnings, infrastructure trade is on after last night's State of the Union. Apple caught a downgrade ahead of its report tomorrow, so these analysts are ganging up on it now. And two guests on the show today. First up at 8:15, Marc Chaikin from Chaikin Analytics, and then at 8:35, Todd Gordon from TradingAnalysis.com. Joel, give us a hint. Tell us how we're doing this morning in the S&Ps. Give us something.
Things are back to normal here, Spencer. Trading into green by 14 handles. Pre-market low at 22.50. That was just under the week close at 24.50. Couple targets on the upside here. First of all, Tuesday's intraday high at 39.50. Current high 39 even. And then, I'm going to mention the 50% retracement down from 78.50 to 18.50. That comes in at 48.50. Another 10 handles higher. Crude down 36 cents at 64.14. Gold just hanging out here at 13.50 level, up $7 at 13.47. Silver above 17, up 19 cents at 17 and a quarter. And Bitcoin is trading down here a little bit, down 6% at 10,328. And as I told Dennis yesterday, I am flat Bitcoin.
You sold your Bitcoin. You're forever a winner in Bitcoin if you don't touch it again, Joel.
Right.
Are you going to rebuy it?
I'm thinking about it. I mean, there's a couple. My mental stop on the downside was 10,000. It got down to 10,036 yesterday. I just think they're going to just shake and bake everyone at this 10K level. So I'm going to look for a re-entry lower. Another thing to allude to here, what did Professor Angel say about Bitcoin? What did he think?
He was the one that was, of everybody who we had on, I really enjoyed his interview there. And he said it wasn't going to crash. It was going to fizzle out. I mean, and that was when Bitcoin was 18,000. It has been a total fizzle out. Just fizzle, and just continues to slide down here. So Professor Angel's called this. I don't know if it's going to continue to go this way or not. Obviously, I'm not a fan, and I think, when the dust settles, I've said for a long time, I think Bitcoin is a lot lower because I just can't extract any intrinsic value from it. Like, I can't figure out if there is any even. But, he said it was going to fizzle out, and he's been right so far.
Yeah, and that's the other thing, too. Look at the volume. The volume is just really dissipated. January 4th, the volume was 21,783,000,000, and now you're under 10 billion. I just think that a lot of the luster is off it. I think they're going to shake and bake the people at the 10K level. And maybe I'll look for a re-entry, or maybe I'm going to start looking at some of these other coins because I do believe in the digital currency. I think that is a wave. I think the blockchain is something of the future. I just don't know if it's Bitcoin, and Facebook's banning ads for Bitcoin. A lot of things are going on. Dennis, we got a quick question here about the XRX. Are they paying it? Yeah, XRX. If I buy it before the close, do I get the special dividend of $8 per share? You couldn't really understand the news.
Where is this question?
This is in the YouTube chat from BZ Tokyo.
Okay, I'm not following the Xerox. Is this Xerox you're talking about? Because I'm not following the Xerox story, so I didn't know anything about a special dividend. All I know is, I'll tell you something. There's news all over XRX here this morning. So just if you're trading Xerox last night, there was rumors broke, I believe, by Reuters that and this has not been confirmed by the company. I don't think denied here either, but Fujifilm. Oh no, actually it is. Is it done? The Fujifilm buyout?
Yeah, this is done.
It is confirmed.
Fujifilm and Xerox announced the agreement to combine.
Oh no, they're buying something else.
They're combining Fuji Xerox with Xerox, so they're merging. So Xerox shareholders get $2.5 billion, $2.5 billion in special cash dividend, or $9.80 a share.
That's what he's talking about. See, I didn't read the story from this morning. Okay. There's been a lot of news here today, guys. So we haven't had time to get over to the Xerox stuff, but give us the details here, XRX, and then maybe I can break it down.
Xerox shareholders are receiving $2.5 billion in a special cash dividend, or $9.80 per share, plus a 49.9% of the new combined company. Fujifilm will own the rest. They also had earnings. Xerox did. The new company will maintain its current dividend, and they're also committed to returning 50% of free cash flow to the shareholders. So special dividend, $9.80 a share, and the Xerox shareholders will own just under half of the new company.
Okay, and I don't know the details of when this is going to happen. I'd be shocked if it happened in one day. So usually there is some time behind these things. But okay, the cash dividend represents 30%. Yeah, they're just looking. So $9.80 is what you're going to get. I don't know if it was announced the date. Maybe Spencer can dig into that press release a little bit farther to see if they have an actual date announced. But usually these things take some time. So I highly doubt they're going to do this, acquisition here in one day. So, once the date is announced, then obviously you have to own the stock before the ex-dividend date, or the date that they're actually going to pay the special dividend. So watch the press releases for that date. You have to own it before the ex-dividend date for any special dividend.
Just noting the price action here, you did get an initial surge on the news. This was after hours. You traded up to 36 even, but it's been kind of a slow leak now, but still trading in the green, 33.85. So just as we're trying to digest the news, so is Wall Street. Let's just keep it green on today. Got a little gap to fill down. Did have a triple top at 33. So shorts might want to try and bring it in there. If you do get a pop, sellers have stepped down from 36, 35 and a half, 35 even, now 34 and a half. So step down seller in there. Certainly don't want to see it go red on the day.
We got a lot of individual news. We're going to get to all these earnings reports like Boeing, AMD, Eli Lilly. There's been a lot of them from overnight and from this morning. But first, I just want to talk about, did you watch last night? Did you watch the State of the Union, Joel? What were your thoughts? I think, he actually did an okay job. I thought it was, there was nothing crazy. I didn't really know what the comment meant by beautiful, clean coal, but that was interesting. But the one thing I did notice, was he did mention about drug pricing, and that was very specific, saying that was going to be a top priority for him to get drug prices down. So if you're, taking stuff, and obviously we always want to look what's the trade from this. I'd say two trades. One is obviously that puts a little bit of fear in some of these drug stocks this morning, and there is some drug stocks that are trading down. Then you have the infrastructure comment. So your infrastructure rally is on. I believe John Dodson was predicting that yesterday. Congratulations, John, because you're making money if you were buying that Caterpillar like you were talking about ahead of the report. CAT is trading up. U.S. Steel is trading up, which is X. NUE is trading up significantly. You can look, other infrastructure stocks like URI are getting bid up here this morning. So there's a ton of stocks here this morning that are getting bid up. The infrastructure trade is on.
Was he going to say anything bad, right? I mean, you kind of go to that,
He didn't put his foot in his mouth. So, that's the main thing I thought. So, because, when you get him up there for an hour, you're like, oh, what's he going to say? I did okay job. I'm not getting, this isn't a political show. We're not going to say whether they're Trump supporters or Trump haters or anything like that. I'm just saying, call a spade a spade. I think he did an okay job, in my opinion.
Well, the market likes it, and that's, you just got to see the response in price. 2-day sell-off ahead of it, now rebounding. Like I said, he didn't say anything that you didn't expect to hear, the infrastructure, bragging about the tax increase. So, status quo. I don't think he threw anything in there. There was a big surprise, and the market doesn't like surprises. We're in the middle of earnings season here, and we have a Fed number.
Yeah, and then we're going to have the Fed decision here today, too. Obviously, after 8:30, we're going to get the Fed decision on interest rates. Spencer, do you have is it 100% we're going? What are the expectations if you look at your pro? What are they saying about this Fed decision that's going to happen at 2 o'clock?
I hadn't looked, but I just assume it's 100%. Because
Joel, is it 100%? We going?
We're going a quarter. We're going up. The rates are going up.
We're going up.
10-year, where's the 10-year going? 2.6, 2.7, 3, 3.5, 4. I mean, eventually, the Fed, we're going to have to find out if the Fed's behind the 8 ball on raising rates. And that's a little worry. If they come in and they, a little bit more hawkish, then, the market's not going to like that. But, look for the bump and then see what the rhetoric is moving forward.
If we look at the financials here this morning, obviously they want rates to go higher, but it's going to be, like Joel's saying, more about the language. What is the language as we go higher here? XLF's trading up 0.6%. We got Citigroup trading up about 0.5%. Bank of America is always one of the best indicators in the pre-market because it's very liquid. It is trading up 0.66% this morning. So the banks are up. They're not up huge, but they're up. And that's not surprising because obviously if interest rates are going up, that's good for the banks. So we'll see what happens. You want to know not so much that they're going up, but what's the language going forward? Are they looking more hawkish or are they looking more dovish going forward? And that is going to be, where banks go after 2 o'clock, depending on the language of how they're looking going forward.
All right. Before we get to the earnings reports, general question here from Frankie Was here. Any tips in identifying if these earning pops will drop or keep running? Let's just cover the reports and go out, after the individual charts. One thing I like to keep an eye on is just your pre-market high. Like, what's that high at 9:29 and 29 seconds? For instance, Boeing here. But before we go into the details here, Spencer, give us that bang up Boeing report.
Boeing Q4 adjusted EPS of $4.80 versus a $2.89 estimate. So a huge beat for the EPS in Q4. Sales $25.368 billion versus $24.69 billion. So blowout Q4. The fiscal year guidance EPS coming in way higher. $11.96 was the original fiscal year EPS estimate. That is now $3.80 to $14. So they beat the estimate for the EPS guidance for the fiscal year by $2.
$14 or $3 to $14. You said $3.
Sorry, $13.80 to $14. The estimate was $11.96. So they beat it by $2.
They're doing everything right here. So this is what we're looking at here. This looks like when you blow earnings away that much, I don't care what the chart looks like. I don't care anything. The stock's going higher. This is like an Alibaba report. Remember Baba back in the day when they just blew the numbers away and the stock went up and kept going up. So I don't know. You see it up 17, you think automatically, oh, is it too much? But man, that is a blowaway numbers when you're giving me and blowing them away like that. So could it go higher? Yeah, I mean, we're right here. Really, there's not even a level in here now. 352 is the old high. We're taking that out. Open above that, it's wide open. And there's blowaway numbers. It's hard to just come in here and say, okay, it's going to give this back because those numbers were just too good.
Trading up $18.29 at 356 even. Your pre-market high is 356.95. I think let's say you had 1,000 share position in this, and I just given hypotheticals here.
Who's got a 337,000 share position of our listener? That's a big position, Joel.
Okay, all right.
Well, if you're an institutional trader, yeah.
Okay, 500 share position.
175,000. And anyways, that's a big position for a lot of our retail listeners that with $350,000.
Okay, Dennis, what do you want to do? What do you like?
Go ahead, give your example.
Geez, 200 shares
on you today.
200 shares.
I'm mad at you, Joel, if you haven't figured it out yet for suckering me into that bet yesterday. If you haven't figured it out why I'm giving you a hard time, you totally suckered me yesterday, giving me the 5-to-1 odds. You knew I'd take it. You knew I'd hit that 5-to-1. I couldn't do it. And I didn't even come close to win the bet. I basically just gave you away a steak dinner here. I want to fun with you now. So I'm angry with you, and I'm going to ride you the entire show because of that bet. Dot your I's and cross your T's, or you're getting hell from me.
All right, you know what? You just walked into that one. I mean, I still can't believe it. It's like all these years of teaching you the markets and probability.
5-to-1 odds, though. I was imagining 7 steak dinners from you. I was going to bring all my buddies. We're going to have a big steak party at Ruth's Chris. I was bringing Spencer along even. Everybody was coming for the steak dinners. Yeah, you were coming, Spencer. Yeah, you were.
Yeah.
I was bringing John Dodson. I was bringing Spinner. We're going to bring everybody.
You know what? The thing of the matter is that, a lot of times it's come back and it's roared back green. And, so you had a chance on it. But the thing about it is like these steak dinners, I mean, these were like year-long bets. Like we made,
Twitter bet was off that one.
Twitter.
Yeah.
And I've been so right on Twitter. I mean, I've been more right on Twitter than you've been right on Twitter.
No.
Yes, I have.
I was bearish from $40. I went to 14.
Oh, God.
I wouldn't say that. I don't know. I think I've done Twitter okay, actually. I was even bullish a few days ago. I think Twitter is one of my best stocks I've been trading.
Yeah.
I got to go look at my sheets and see which Twitter.
Let's say you have 200 shares of Boeing, okay?
All
and you want it, I mean, can it go to 360? Sure. But I would just put a,
80.
No, it's not going. You want to make a bet on that?
He's going to say a bet. He's coming out with another bet.
I would still out
right now.
If I was long, I would have 200 shares. I'd have 50 at 357, 50 at 58, 59, whatever, and try and find out where the seller is. So that's a long diatribe, and we're keeping Marc Chaikin waiting.
It's okay.
Let's go look at the book. Okay, sorry. I'm just looking at the book really quickly. Go get Marc Chaikin. We're bringing him in here just as I'm looking at the book. What's in the book? Boeing.
I'll bring Marc in on that.
It's pretty empty.
Book is empty?
Pretty empty. There's some size in there, like 10,000 shares here, 5,000 shares here. But I don't see it be like 100,000 share order jumping out at me. So, of course, it's Boeing, $350 stock. So,
all right. Well,
let's go grab
All right. We'll take a quick break, and I'm going to grab Marc. We'll be right back. And welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. And now we're on with Marc Chaikin from Chaikin Analytics. Marc, normally we talk to you from Philadelphia or wherever it is you are. But now, today, you're in New York because you're prepping for, I guess it's are you having a debate this morning with Cramer? What exactly is happening?
Yeah, it's a one-on-one head-to-head roundtable. You can call it a debate. We're going to talk about the best stocks for 2018. So we have some stocks we agree on and some stocks we disagree, and it's going to be very lively.
Well, you got to give us the good stuff now, though. So what are the best stocks? What are the best stocks for 2018?
Where I'd be booted off the air. I think that's called front running. But I will talk about one stock that I really like, which is Boeing. Boeing had a nice 5% correction, and then this morning they reported a blowout quarter, and the stock has spiked up dramatically to new all-time highs. This is a stock that has legs. It was one of the best performing stocks in the Dow in 2017, and they're benefiting from a stronger dollar, and I think this is a stock you need to own. We were looking for a pullback. We got it over the last 2 days, and now new highs again. So very powerful cyclical stock in the industrial sector.
I mean, Cramer has talked about the stock on Mad Money for, the months here. It seems like every other day Boeing gets, and he was saying the same thing you were saying, Marc, in the last pullback. He was a buyer of the last pullback. So he'll be happy that the stock's trading up 20 points this morning. We actually just covered it technically, and it's so difficult to cover something technically when it's making new all-time highs, because there's no levels up there. So, I mean, this is in full breakout mode here again, blowout quarter. How do you short it? Hard to be short.
You don't.
Yeah. What about Target? What about Target, Marc? I mean, do you have a target? We're getting some questions in the chat here. I mean, I guess it just has to be your time frame, right? If you're holding some weekly options, I mean, man, it's kind of hard not to take them off. What do you do? You look for half and whole numbers. 360 doesn't seem out of the question. What kind of advice would you give someone let's say they're a shorter term trader, took this home overnight. What clues in the market would you be looking for?
Well, I like to sell into spikes on earnings reports if I'm a trader, especially if you're holding short-dated options. So you're absolutely right. An opening like this morning, assuming it holds the gain, is a perfect spot to take money off the table. I think in terms of longer-term price projections, you have to go back and look at historic PE ratio ranges and sort of take a best case, an average case, and a worst case scenario. So I looked at the analysts' price targets for Boeing. The average price target is 367. Now you have to recognize analysts are like sheep, so they'll sort of converge on a number. But then I looked at two analysts at Cowen and Company and Baird and Company that have very good track records, and they're looking for 415 to 433. So I think it's reasonable if you're an investor to look for 400 on the stock, which is a really nice move.
Nice segue about the analyst, and being sheep. And Dennis and I were talking about this on the pre-market show. I mean, no love for Apple here. Report tomorrow after the close. Just to ask you, I don't know if this is something you're going to be talking about with Kramer, but what's the Chaikin money flow indicator saying here? And just make a comment on just like all these downgrades ahead of the report.
Well, that's actually bullish because it gives them the potential to outperform even if the quarter is mediocre. With Apple, it's always about the guidance. We sort of know now that the 10X rollout has not been a home run. They're cutting back 50% expectations to their suppliers. Stock has a neutral rating in our model. It had a bullish rating. I don't like the technicals, but they're not terrible. This has happened before for Apple. But ahead of an earnings report to see a downgrade, Bank of Montreal downgraded it yesterday. I think they're a little late in the game because unless the numbers are just terrible. Remember, Apple is not a technology stock. This is a consumer play. They have the best consumer franchise ever, better than Coca-Cola. It's total brand recognition. They're getting revenue from the music. They're getting revenue from the apps. And I think Apple, if you view it as a consumer discretionary play and back out the cash, maybe it's trading at 11.5 to 13 times earnings versus Colgate and Procter & Gamble selling at 20 times earnings.
Yeah.
Come on. So if you view it as a tech stock, you're going to be disappointed. If you view it as a consumer discretionary play with a big brand, I think you're going to be a happy guy. But Kramer does say one thing that I'll reiterate. Apple is a stock you want to own, not trade, because if you trade it, you're bucking all these analysts who are all over the place, and that's tough.
I like to do both. I like to trade and own it. But anyways, I completely agree with you here, though. Like with Apple, you look at it and you compare it to, where the multiples are on even the overall market. And it's just like, how do you not own this stock when it's got a PE multiple going forward at 12 or 13 compared to 20, or like you were saying, even in Procter & Gamble, I think it was 22 or 23 times. You're not getting any growth there at all. And Apple always has the wild card because they're so innovative. Like, you never know what Tim Cook is cooking up there in the background, too. We know AR is coming. There's a lot of other things coming as well. Everybody says, oh, they're just an iPhone company. But they got some other stuff cooking, too. Don't kid yourself. So I like the possibility. So I think of it as like a cash flow, cash cow play with the potential for new products and growth.
I agree. And now you've got the repatriation of the cash. Now that's factored into the price. There's nothing new there. And they're probably not going to do anything dramatic with the cash, like increase capital spending. Their budget is about $30 billion, which is where it was. What they are going to do is buy back stock and increase the dividend. So think about Microsoft 10 years ago. Microsoft was considered a cash cow, no growth potential. Apple is a cash cow with growth potential for the reasons you just articulated. You never know when Tim Cook's got something new up his sleeve, and where it's going to come, we don't know. And that's the beauty of Apple. I think it's a core holding, in a 401k plan. I think if you're an aggressive investor, you really have to pick your spots, buy it on dips, be confident, and then trade around it. Options are a great way to be both a trader and an investor in Apple. When it gets high, you sell an out of the money call, you bring in some income. The risk is it gets called away at a higher price. That's a win-win. So I agree with you. I like to trade it. I like to invest it. The way to trade it, though, is by writing options against a core position after it's rallied.
Marc, some other big reports here coming tonight. You mentioned Microsoft just briefly here, but let's go to Facebook. It's going to report here after the bell. It is a stock that came right back. It had the news there a couple of weeks ago where they knocked 10 points off it quickly, but in 5 days it's back here again. A stock that's very loved by the overall market. What are your analytics saying about Facebook?
The Chaikin power gauge rating, our 20-factor model, is bullish on Facebook. I think with Facebook, it's less about the earnings than with the metrics. So people are going to be looking at monthly average users. They're looking for 2.13 billion, up from 1.47 billion a year ago. So that's a huge jump. They're looking at revenue per user. It's estimated to be about 590, up 22%. And also how they're doing in the Asia Pacific rim, where they expect to see roughly 2 billion users, up 51%. So the metrics are what people dive into on Facebook. The stock looks beautiful, made a new high 2 days ago, and it's got a bullish rating on our model. Now, there is a little concern over government scrutiny. It looks like Zuckerberg is hearing, the drumbeats out of Washington, because he banned ads for certain Bitcoin promotions yesterday. Very wise, ahead of a possible meltdown in some of these secondary cryptocurrencies. And, he's doing a few things that tell me that he is not tone deaf to Washington. And that's been a real theme around Facebook and Google recently. Is the government going to clamp down about privacy concerns, about the trolls from Russia, getting involved in our elections? Long term, Facebook, it's all about user count and revenue growth.
Marc, question from the chat. Question from the chat here. One of our chatters asking, do you like any of the cruise ship names? Carnival, Royal Caribbean, Norwegian. You like any of those?
I like Royal Caribbean. I think they reported a good quarter, and consumer discretionary is doing well. And the latest GDP numbers, although they were something you needed to parse because of the hurricane, the one clear-cut metric in the GDP numbers that were released was that the consumer was spending. Spending was 3.3%, up from 2.2%. So year over year spending, and they're not doing it on restaurants. They're doing it on things like homes, on cruises. Millennials somehow have something for cruises that my generation didn't have. So they seem to like them for some reason. Maybe it's a nice bonding experience, or you get a rave down in the hold of the ship. I don't know what it is, but millennials are taking more cruises. I read an article just the other day on that in Forbes.
Marc, before I let you go, what time is this Kramer versus Chaikin going down, and how can people watch it?
It's 11:30 today, live for an hour, 11:30 to 12:30 Eastern time. They can go to chaikinanalytics.com and sign up, and they'll get a reminder about an hour before. And greatly appreciate you guys giving us a shout out on the event. I'd say in a 52-year career, other than talking to Spencer and Dennis, this is the highlight of my career. Really excited about it.
All right, Marc.
Thank you guys for supporting it.
Yep. Thanks for coming on. Hope it goes well. Have a good one.
We'll look forward to watching.
Thank you.
Yep.
Thanks.
I appreciate that.
All right, what time is it? 8:29. So 1 minute until we got imbalances, but I feel like we need to talk about some more earnings stocks. We really only did Boeing. Do you guys want to do
AMD in there?
Yeah,
AMD.
I was gonna throw AMD in there. AMD reporting yesterday after the bell. I'll get the chart up here in a second. Q4 adjusted EPS 8 cents versus a 5-cent estimate. Sales of 1.48 versus 1.41 billion dollars. So beat on the EPS, a beat on the sales. Q1 sales guidance coming in hot. 1.25 billion was the estimate. 1.5 to 1.6 is what they see for the quarter. And then they had some comments, some cautionary comments on the call. A number of potential risks that the company is subject to, claims related to side channel exploits. They may face claims or litigation for future vulnerabilities. Can't say that word. And that is something that they did not like on the call.
Impressive move, though, here for AMD after hours. The stock rallied, and then it fell down. Believe it or not, this thing went all the way down to $11.88. So we went from up over $13, initial pop on the report, fell, basically 10% down to $11.88, and then rallied the whole thing back. So just an impressive move here for AMD here after hours. It's good, that it came all the way back, because last time it sold off, it did not come back, and this time it is. Obviously, I own AMD in my invest portfolio, so I was happy to see it come back.
Joel
must be on mute.
I don't know. Yeah, he's on mute.
Joel.
Okay, the old mute trick.
The old mute trick.
We got a nice setup here for our traders, and I don't think you're going to be seeing that 11.88 low. The initial spike was 13.56. The former high of the move made 2 days ago was 13.47. So you have someone targeting the 13.50 area here. So that's big. You clear 1350, greener skies ahead. You have a gap to fill in it all the way up to 1380. So you're getting into that gap range, but let's see what happens here at 1350 in shares of AMD.
Imbalances just came out. They're not that big to the buy side. I think that's why you're seeing the S&Ps leak just right now for a little bit here. We do have a few sell imbalances. Some of those pharmaceutical companies that we were talking about earlier are showing a little bit of weakness from an imbalance perspective. Abbott Labs, 28,000 shares to sell here this morning. I'm looking at Bristol Myers with 10,000 to sell. I'm looking at Merck, just small, 2,300 to sell. So that one's small. A lot of the other ones are NASDAQ. Those obviously don't come out till 9:28. So we don't know what the opens are looking like on those yet. We can just look at the pre-market action. I will say the Biogen caught an upgrade here today and is trading up $4. But other imbalances here, Alibaba, 39,000 to buy. Twitter, which is just, we talked about it earlier, Twitter, 57,000 to buy, continues to be a nice performer as of late. Bank of America, some of your financials showing a couple buy imbalances. Bank of America, 81,000 to buy. But then there's Goldman. Goldman's been pesky lately. That's got 54,000 to sell. And Goldman, for some reason, they keep on having sell imbalances come out. Goldman, right before this number was released, was trading 270.50. It's 269.50. So it just fell a buck because that imbalance data came out and showed a big sell imbalance on Goldman. So that one stands out. That's pretty much all. I mean, they're relatively small, but they're not as big as I thought they would be. I think that's why the S&Ps are leaking a little bit here right now.
Dennis, are you keeping an eye on any of the GE preferreds here? Jimmy A says, what's up with the GE preferreds? Up huge today.
Well, I don't know if that's the case or not. Let's go check it out. So just GE. I'll just go grab the GE. Yeah, there's 3 of them there. It's always confusing because they used to have a whole bunch of them out there. And now they only have 3 that are listed. And these are actually traded debt securities. So there's GEK, there is GEH, and there is GEB. And yes, they are all trading significantly higher here this morning. I don't know if there was some commentary. That is very interesting here, though. So I'm not following that story, but I will go and look here right now and see what is going on here. You wonder if they said something about, this capital structure, if there's any capital comments. I'm just looking. There wasn't multiple comments here this morning. G likely to be dropped. G capital balance sheet to recover after long-term care stumble. There's got to be something. You're right. We're going to have to do some digging because I did not notice that here this morning, so I didn't pre-dig it. But I'll get back to you on that. Maybe I'll tweet out what the action is because there's obviously been something said about those securities here because they wouldn't be up that much.
Trying to put in a hard bottom here at 16. We've seen this pattern before. 3 lows under 16, 15, 93, 97, and 95. So, there's your support. It's just trying to get off the mat here. Not sure if the move in the preferreds will help it or not.
Jump over here just to a few other stocks before guest. One more earnings play here. Let's go to Electronic Arts from last night. EA had a big report. It's trading up 9 points here in the pre-market. Give us those details, Spencer.
EA Q3 GAAP EPS of a 60-cent loss that does not compare to the $2.19 estimate. GAAP sales of 1.16 billion. Their Q4, that was for Q3, so their Q4 guidance, EPS $1.86 and sales of $1.532 billion. So the numbers, because it was GAAP, there was some adjustments, or really don't compare, and I don't think they had any guidance estimates to compare with as well.
EA, huge move here after hours. Joel, the stock is breaking out here once again. The resistance was up at 120. That is gone. Now you're looking at new all-time highs here for EA as well. I mean, this stock has been a monster performer. 5 years ago, it was $10. Now 127. I guess 6 years ago, because years are flying by. But 2012, 110, or it was only $10, and now it's 127 in the pre-market. Incredible move here again for EA.
Your high of the move on the initial pop was 129.49, but seems to have a seller just under 129 now. But the thing is it's really not backing off at 127.72. So once again, you're looking at your half and your whole numbers here. If the rally continues, it just right now it seems like it's well bid, and no one could really take it off this high. So keep an eye on that high right before the 9:30 open for a potential target.
All right, it's 8:35, 8:36 actually, and I'm going to grab our next guest on the fly. I hope this works. Todd Gordon is going to join us via Skype in a moment. He is a CNBC contributor. He is also the founder of tradinganalysis.com. Oh, and there he is. Todd, how's it going?
Good morning, guys. What's going on?
Not much. What's going on with you? How is this market treating you?
Yeah, it's living the dream every day. Yeah, it's good. Could they fit any more data and fundamental and geopolitical in this week? Yeah, it's good. Markets are good. Like huge volatility premium coming into this earnings season. You guys kind of seeing that?
We're seeing the volatility. I mean, in the shorter terms options, I mean, they always juice it, ahead of the reports, I mean, that's really, where you're seeing it. But just give us a take here. I mean, Apple here. I mean, I just want to go to that one. I mean, analysts well, first of all, I want to say you got one heck of a nice setup there. You got you got the microphone hanging down, and you're not wearing a hat like Dennis. I mean,
I put a button down shirt on just for Benzinga. I'm doing my best Howard Stern impression here. So let's talk
Apple. Let's talk Apple. Man. I mean, analysts pounded it ahead of the report.
Yeah, they certainly did. I've got the iPhone 10 over here, and I feel like that's the consensus. Just okay. I mean, technically, it's really in pretty bad shape here. The loss of the 168, 169 was no good. Implied volatility is almost never been more expensive. I think implied volatility heading the report is 34%, which is on the top end of the 1 year range. So like for Facebook, for AT&T, Apple, like I'm going to be doing some short premium long data option positions with my subscribers heading in. I think the market is not in a place where it wants to take a directional stand. I think we're at this inflection point where a lot of decisions are being made, interpreting all this data, where volatility should remain high. But I kind of feel like we go sideways and just kind of pick the next direction. I don't think we're going to see like up or down overall this coming from this week.
All right, Todd, give us some other stocks that you've been watching this earnings season. We're just now, this is like the biggest week today and tomorrow.
Yeah.
There's like Apple, Amazon, Facebook, Microsoft, pick your poison. So what other stocks are you watching?
The couple of positions, I was listening to the show earlier. You're talking about EA earnings. One that I really like, it's not this week, it's next week, if that's okay, is Activision. ATVI acts really well. I think it was one of the few stocks that was up yesterday. I think Activision reports February 8th. Implied volatility is really jacked up. The chart looks great. I've got some 70, 68 put spreads going on. I'm going to be looking to add to that. That one looks really good. AMD, that was a good response after hours. Another one that I'm looking at here is NVIDIA. I'm holding that stock for earnings, which I think, again, I'm sorry to be putting out to next week, but NVIDIA is also February 8th. So just kind of looking ahead for those guys. Those stocks are two of my key holdings that are just kind of bucking this overall volatility. But in terms of stocks right now, the one market that I'm definitely looking to play, which looks pretty locked in, not really any direction, is AT&T. Volatility is really jacked up here, right around the 37 mark, no direction. I'm going to put some option butterflies in for that release.
On the AT&T. So
yeah,
set that up for us. Set that up for us when you say that, because we have a lot of traders who are newer to options. Can you set up a trade, like a potential trade for us?
Sure. So if we go over to the option chain, and this is a good way. So I've got Activision on the brain. AT&T is about 25% implied volatility over the last 52 weeks. It's hardly ever more expensive. So trade I'll probably be looking to do is you go to the option chain. If you look at the implied volatility right now, it's 146% over the next year for options that expire Friday. Then after the earnings come out, when you look at the option chain for next week, it drops down to 98%, 82%. So obviously a huge volatility priced in there. So I'd probably go, sorry, I'm looking at the wrong one. Hold on. Sorry. Wrong chain. Sorry. Let me reset that. Forget those numbers. Concept still stands. So AT&T right now is at 44.7%. So we're trading 37.5. So what I would do is go right to the 37.5 options. That's the current market. I would probably sell 2 of those puts. Okay. So you can do this with puts or calls. I would sell 2 right at the money. And then you can go a couple dollars above and a couple dollars below and buy one. Buy one option a couple dollars above, one a couple below. So maybe sell 2 of the 37 halves, buy one of the 37 half, buy one of the 39 half. So you're short 2 options, long 2 options. And what you're hoping is that the stock stays within that range. And those 2 that you're short in the middle, when the implied volatility crush comes out post earnings, those 2 that you're short, you'll clean up on. You'll lose money on the wings likely, but you'll make money in the middle, and the difference would be hopefully profit. The expected move is $1.21 higher or lower for AT&T. So, a $2 wide butterfly might be the way to play that. And it's a fixed risk trade. If you're completely wrong and the stock falls out of bed or it rips higher, you're going to lose the cost of the butterfly, which is very acceptable. So just one way to look at it. And kind of what I think, like based on the technicals, I feel like this is kind of a sideways transitional market deciding, can it continue the rally into 2018 with such high expectations in terms of earnings? I don't think this earnings growth can be sustained. So I think this year is going to be a crazy, crazy transitional volatility filled year.
Let's jump over to a couple of the reports that we are going to get tonight. We briefly talked about Facebook already, but we didn't really jump into Microsoft. And Microsoft here has been on a run too. Had a bad day yesterday. Everything had a bad day yesterday. It is bouncing back here this morning. It's up 90 cents. What are the options saying about Microsoft going into tonight's report?
Sure. So Microsoft right now, we're looking for a $4.11 move higher or lower. That is a 68% implied volatility over the next year. And then next week's options drop down to 45%, 38%. So again, a really high implied volatility premium put in there for earnings. Microsoft looks different than AT&T. As you said, it's just, Microsoft has just been one of the clear leaders. It's one of the most loved tech stocks out there. This pullback to 92 looks pretty good. Instead of doing kind of a range-bound strategy, I might do something like a put spread. So as we're trading 92 3/4, maybe sell a 91 put, buy an 88 put. Hopefully we stay above the 91 area. If not, that's fine. Even if we go sideways or even slightly lower, again, that IV crush post earnings will come out. So you will make money on the stock that you're short. Just hopefully they don't miss.
Just more questions coming from the chat, just on educational standpoint. Just tell us how you calculate that implied move, because some of our chat listeners would like to know how to calculate that from options.
Are you guys pretty much platform? I don't want to say anything.
Agnostic?
Are you guys platform agnostic, or where are we at Benzinga?
Yeah. You can. We are agnostic. You can say whatever you want.
Okay, cool. I'm just looking at Thinkorswim here. I've just been using this platform forever. So Thinkorswim, all the option platforms will lay it out there, but I'm using Thinkorswim. And if you look at the option chain, there's a number just off to the right. If you look at your strikes and your expirations, there's a number off to the right where the percent change is listed there. So it's a really good way to just kind of figure out what the markets are expecting. And so that's pretty much it.
And if you just wanted to do it manually, you can just take the puts and the calls at the same strike and add up the premiums, and then that'll get you the implied move.
Yep, exactly. Just do the straddle. Exactly. You know, and another one that I like, and again, I know this is such a big week, but I've been carrying Alibaba, and I think those guys are, when's Baba? I think that's February. No, that's tonight. That's tonight, isn't it?
No, it's Baba. Baba's not tonight, is it?
Baba is.
I don't have Baba on my list.
Baba. Wait, I'm
I don't
sorry.
think so.
I'm looking at my wrong calendar. Baba is
tomorrow.
Baba's tomorrow.
Yeah, tomorrow after the bell. Before the bell, tomorrow morning.
Yeah. Okay, thanks.
Yeah.
So here's another one. I've been holding this one. Again, volatility in the 52-week range is in the 100th percentile. It's never been more expensive over the last year. So like I've been just doing these put spreads. I'm a big Elliott wave guy. I kind of combine Elliott to figure out the market positioning, the sentiment, to figure out where to structure my strikes. And, you know, why not just take advantage of, Bob was acting great, but why not take advantage of like this huge rotation out of US to a certain extent, overseas, emerging markets, China. You look at the FXI is ripping. Chinese stocks are just on fire. So I'm like, Bob is one of my favorite earnings plays for tomorrow. So, you know, you're getting a ride on obviously the big Chinese run. The chart looks great. Volatility looks really high. So I've got the position on now. I'm going to add to it with my subscribers for tonight. So I kind of like this one on the upside up through 200 for good.
Todd, I just want to do a general market question here. I mean, you know, we had our first back-to-back down days since December 19th and 20th. And, you know, I'm like a level guy and I'm doing my resistance and it just, you know, got so tedious. And, you know, but now you had a nice pullback. You had a move from 78.50 to 18.50. That's a nice move. What do you get? Like, I know exactly what I'm looking at. I'm looking at the 50% retracement of this move.
From where?
From the 28. I'm looking at the SPOOs here, the March SPOOs. We went from 28.78.50 down to 28.18.50. You know, beautiful 60-point move there. Halfway back is 48.50. So for me, you know, I'm looking for the market. If it goes up, it tests that level, hangs, closes above it, then I think we're going back up to highs. The longer it takes for us to get to that level or not even reach it, I think that there could be some more downside here in the market. I just wondered, you know, we finally got a retracement here. Do you factor that in at all? Or what are you using as an indicator to say, okay, that was just another pullback. We found support. We're rallying. Boom. We're going to 2,900. What do you use?
Yeah, again, a great question, Joel. I mean, and by the way, did you hear Trump mention Saratoga in I don't know if you watched his speech last night.
I missed that. What did he say about Saratoga?
Well, he's talking about famous battles, and he said, Battle of Saratoga. And I was like, Saratoga!
That's where they have the Travis steak. And I'm going to make it out there. I am putting it on my calendar. No bar mitzvahs this year. We are coming, and I'm going to get some of that homemade whiskey that you
come
make.
On up, right?
Dennis, coming with me?
Everybody has I think we're going to build a house up there. I think I'm leaving Jersey, and I think we're going to build something just about a mile from the track.
Don't leave Jersey, Todd. Don't do that. Don't do that.
We've got a tax-friendly environment. We have no overcrowding. We've got, property taxes are a dream here. Anyway, Elliott, where I gauge, get my market context. You know, Elliott is a theory that came out in the 1920s to the 1950s based on Dow theory, and it just kind of helps me figure out where we are in terms of maturity of the trends and the corrections. And as I'm looking at my weekly S&P chart, and I love that you're doing the retracements from recent, but like let's look at the last significant market correction, which was August 2016 to November 2016, and the S&P went from 2196 to 2086. So it's 100 points as a percent of almost 2,200. So let's call that a 5% market correction. We're at such elevated levels here in the Dow and the S&P. Let's do a calculation. So 2850. So 10% would be 280 points. 5% would be 140. You know, we're only what, less than 50 points off the high. So even to match a significant, even a mentionable correction drops us another 100 points in the S&P. And that is just to square up in terms of percent retracement. to the last correction that you could even bring up that's even mention worthy. So my point, like, I don't think you've seen anything yet. As I said, I think earnings for this year are priced to perfection. And I think a lot of tech are going to have a hard time kind of meeting those earnings growth expectations. I mean, when this party really gets started, guys, I mean, I think this market's going to come off sharply. I'm not trying to scare anyone. I'm very light in terms of positions. I'm long, but I'm trying to keep a lot of cash dry, and I'm going to hammer the short side. And if I'm wrong, so be it. But I'm never going to forgive myself if I don't try. And, I think if we start getting some momentum below 2,700, that's when the uptrend of 16 is broken, and we're going to be challenging some longer-term support levels.
We've been on the line with Todd Gordon. TradingAnalysis.com is his site. Also, CNBC contributor and a dog in the background. I don't even know whose dog that is at this point. But in any case, Todd, thanks a lot for hopping on today. Have a good one. We'll talk to you again soon.
Thanks, guys.
Thanks, Todd.
See you guys.
All right, 8:50 now, guys. Where are we at with the markets?
I did some digging too. I did find the GE stuff. So and I believe this is the case, why those GE notes are trading up. So we're looking at GEK trading up 6% here in the pre-market. We're looking at GEH trading up 7% in the pre-market, right back to par. GEB trading right back up to par at 25.03. There was actually a non-traded note. So this is an over-the-counter note that was called last night for redemption, the 4.625%. I had to really dig to find this. So GE sent out a note to redeem last night. They sent out the notice that they're going to redeem the 4.625% fixed rate note. These three notes are almost the same. They actually have a yield higher. So now there's speculation that, hey, if GE is redeeming notes, they're not in cash trouble here. So any concerns about credit probably gets thrown out the window, at least for now. And if they're redeeming the 4.625, are they going to redeem the 4.87? Everybody who's short this thing is scrambling right now to cover, and that's why it's trading higher. I did not see a redemption notice on these, though. So these three notes, I did not see a redemption notice for them. It could be out there. I really had to dig for this one. And sometimes when they call one, they call others. So that might be why par value is 25 on these things. It was trading at 23.29 last night. So arbitrageurs are saying, hey, these things could get called as well.
Okay, great analysis on that, Dennis. 8:52 here. We got 8 minutes. So Jimmy A wants to know, well, I know where you found that. You do your digging and heavy digging and you found it. But some more earnings reports here as the S&Ps are coming off here just a bit, still up 10. So let's finish up with the earnings.
Spencer, where do you want to go? We'll give you the lead.
You'll let me decide? Wow. Okay. Well, we covered Boeing. We covered AMD. We covered EA.
Oh, Juniper. I'm not letting you decide.
Juniper. Okay. This is one. Actually, no, I would have done the same way because I actually
down 10%.
I had a bet on with Matt Kolb here, one of our sales guys, that Juniper would open lower today. It looks like I'm going to win my bet. Juniper Q4 EPS 53 cents. That beat by a penny. Sales of 1.24 versus 1.23 billion dollars. So the numbers for the Q4 don't seem terrible. But then when we get over to the guidance, Q1 adjusted EPS, 22 cents to 28 cents is what they are foreseeing. The estimate was 42 cents, so they missed that one by a lot. Sales of 1.02 to 1.08 billion, 1.15 was the estimate. So very poor guidance. The reason Matt Cole thought it was going to open higher is because they also reported $2 billion buyback, and they're raising their dividend from 10 cents to 18 cents a share.
So nice dividend raise. Obviously, in this stock is one that just perennially disappoints. And it was in play a while ago. If you remember back, there was the another CNBC report that didn't come to fruition, but there was rumors that they were going to get bought by Nokia. And the stock had a huge pop after hours, $35, never came back. Now it gets down here. You know what? This is one, and it's been just such a laggard. It's got a dividend. They're raising the dividend. Is it a value trap? That's the question, because there's a lot of value down here with Juniper. Now, is it a value trap? That's, the biggest question. I've been stuck in these value traps before. It's one I've had my eye on for a while. I kind of like it down here at 25. I kind of like it for a long-term investment just because it hasn't run like the other ones have. And they make some cash, and there's a potential that if there was rumors before, maybe rumors could materialize again. I think, it's got some support down here, but it's just been such a laggard. It hasn't went in this up market. Then you got to say, well, what's going to really drive it higher? If it can't go up in one of the best, bull runs we've had in the last 2 years, what's going to eventually take the stock higher? Who knows? But it's been a perennial disappointer.
Trading at 25.41 here in the pre-market. That's down nearly 3 sticks. But someone's trying to bring in a short here. You have found a buyer. I mean, it's not racing up. They're just putting their bids out here. That coincides with some lows that you had in the 25 handle. Back, when did you have those lows? You had a low at 25.33 on November 14th, and then you had 3 lows in the mid to upper 24 handle. So if this buyer steps away here, see what happens at 25 even. But I do see really 4 lows around 24.7, even more than that. A lot of support in the lower 24 handle. If in fact we do get down, actually 1, 2, 3, 4, 5, 6, 7, 8 lows within a 50-cent range, and this was back in early to mid-November.
And let's go over to the Eli Lilly report here. It is trading up in the pre-market. It's a stock that's widely followed and traded, although not traded that much this morning here. The volume is fairly light, but trading up here on the report, Spencer details LLY.
LLY reporting this morning Q4 adjusted EPS of $1.14 versus $1.07. Sales of $6.16 versus $5.94 billion. So they beat on the EPS number. They beat on the sales number. They're also raising their guidance for the fiscal year. EPS guidance being raised by 21 cents, and sales guidance was reaffirmed.
LLY has been at Shop Fest in 2018.
Yeah.
A real, what do you call this? The accordion chart, Joel, when it's going up and down and up and down and up and down. Yeah. There's really no rhyme or reason to any of this. I can just tell you, major resistance up there in the upper 80, like 88, 89. Major support down at 82. TradeTheRange.com.
Yeah, you did get a spike up to 88. I don't know who would buy this thing up $2 on a report. Obviously not many people, because it traded very little volume there. 87 is going to be the battleground here, because your high from yesterday was 86.94. So hold 77 or 87. You have a chance to test that resistance all the way up to 88. On the downside, if we do go into reverse, your close and your low were, the close was 86.09, so that's your first support level. Yesterday's low was way down at 85.21, so needs to stay green on the session. This is kind of hard, for a stock to move, a drug stock to move off earnings, but you did get a nice pop.
I just want to talk about some themes here. Let's do ratings, and then I just want to close with my theme here. Quick look at ratings. Biogen getting upgraded at UBS. We got the double upgrade, Spencer. You always like those. UAL and AAL getting upgraded at Bernstein, so they're upgrading 2 airlines. Apple is downgraded at BMO, and Foot Locker catching an upgrade at Oppenheimer. Anything else from ratings land jumping out to you that I didn't just cover?
No, those are the big ones. You covered the airlines. You covered the Apple. Nope. Those are the ones that caught my eye too. AK Steel. Did you say that they got downgraded?
No, AK Steel did get downgraded here today. If you're wondering why it's trading up, it's because every steel stock is trading up this morning. They got downgraded. Underperformed Bank of America. They're still trading in the green here. Full disclosure, I'm long a little bit of AKS, although probably going to dump it into this rally. But if you look at X up on the infrastructure play, it's up significantly. Even overseas, MT catching a bid. Steel is up this morning. Nucor bouncing back after having a terrible day yesterday. It's up over 2%. Steel is strong this morning. Let's jump over to just one theme here. TLT is rallying significantly here this morning, kind of going under the radar. And I always like the under the radar trades. Banks are all trading higher here. There is usually an inverse correlation between TLT and banks. I'm a seller of banks if the TLT stays up here. I think it's rally here in the banks, especially with Goldman now trading in the red. And obviously sell and balance having a lot to do with that. 76,000 to sell with Goldman. But I think the banks don't hold on to these gains. So that's one trade. If you're looking at something here this morning, I'm just going to lighten up banks, I think, into this rally.
And just my overall market thought here, 2 days of volatility. You're getting some of those gains back. I just don't think we're just going to rip higher today. I just don't think we're going to barrel through that pre-market high of 39 even. Yesterday's intraday high 39.50. So I think you're just going to get a little profit take, from the buyers yesterday are going to scalp out of some of these trades. You got a Fed decision. You never know if they're going to take a little bit more hawkish stance. Really, that would put a spook into the market. If they, if they go a half, then just hit your sell button. But they're not going to do that. But it's going to be the tone, and if they're going to accelerate the pace of interest rates going up, then it's going to be a little bit of a challenge to the market. Even though 2.5 on a 10-year, 3%. I mean, that doesn't compare to the returns you can get in the market at this point. Spencer, you want to wrap up today's exciting show? And I just want to mention, what a great segment with Todd Gordon. I mean, what a setup and what a professional guy, Todd. If you're still listening, we got to get you back on again soon. Then I want to get one of those little mics that hangs from the ceiling. And
I want one of those mics that hang from the ceiling too. Everybody makes fun of my headset. They gotta say, get a new one.
Yeah, you got to get rid of that Best Buy 1999 headset.
The Best Buy I actually bought this one last year. Logitech.
No, I think I know you're attached to the headset, but I do think it's time for a new one. Speaking of,
it's got too many cords hanging off your face. They only have the one cord. You got like 2 cords hanging off your face there.
Yeah, but our headsets are nicer. So anyway,
how do I get one of those? Send me one of those.
Jason will buy you one.
Yeah, right.
Okay.
Great. All right. That is our show for the day, folks. If you want to catch any part of it again, you can do so. We're on YouTube, youtube.com/BenzingaTV. Or go to our podcast, iTunes, SoundCloud, and Stitcher. Thanks to our guests, Marc Chaikin and Todd Gordon, for joining us today. Thanks to those of you who joined us on premarket.benzinga.com. On tomorrow's show, we're going to be joined by Tom Thornton. He is from Hedge Fund Telemetry. He will join us tomorrow at 8:35. That's our show for the day. Hope you all have had a good morning and you have a good rest of your day. And we will see you folks tomorrow.
Peace.